Hello and welcome to Leviathan News. I'm your host, Samuel McCullough. Today is April 16th. It's the day after tax day. I hope you all filed or at least extended. I know the tax man came and gave me a large bill, took half of everything that's in my bank account, and hopefully teaching me a lesson that you should just never sell anything. The diamond-handed Bitcoin people just have the right idea. Us DeFi people who have to make lots of transactions are just in for a world of pain. I just want to talk about our sponsors first, which is Frax. They've done a great job of supporting Leviathan News throughout our beginning existence. And they have a L2, which is called Fraxtal, and you can find our Squid token there. It's paired up with ETH and a few other currencies. And for our Squid holders, we just dropped Squill, which is going to be a governance token for a new project that we have coming up that's going to be announced tomorrow. So go check that out. Additionally, check out Paloma's Got Talent. We got a link for that in below. They have a 500 indie games that they're trying to release as tokens for YouTube creators. So pretty cool stuff. So go check that out, and let's start with the show. All right, hello and welcome back. Today we have on Jason Leibowitz, who last time we had on to come talk about helping high net worth individuals acquire BTC. And this time around, he's actually switched into a cool new position into a company called Meanwhile, which we talked about earlier in this week in our newsletter. But Meanwhile just raised $40 million in a Series A. That's pretty big for a Series A. And from some really well-known investors, including what is it? Carson
Framework, Folger, and Wences Cesares from Zappo.
From Zappo. So, Jason, great to have you back.
It's a good timing to be back, by the way, because it's the day after tax day, and we have an amazing product at Meanwhile that basically allows you to sell Bitcoin without ever paying capital gains or income tax again.
Well, I like that.
So you were saying diamond hands. Well, power to you. You're not selling. You're not paying. You don't have to pay taxes because there's nothing realized. Well, when you have an insurance wrapper on your Bitcoin, you don't have to pay taxes too, because insurance, at least in the U.S., is built with U.S. government support with all these tax incentives. It's good for American citizens to have life insurance. It protects them. It protects their family. It creates less dependency on the state. And you put Bitcoin in it and you build it the right way, like Meanwhile did, and suddenly you get all these tax benefits on your Bitcoin, your spot Bitcoin that you've had for many years.
So how did you actually end up at Meanwhile? Because the last time that you were talking, that we spoke, you were an independent consultant that was helping people acquire Bitcoin and essentially teaching them how to self-custody and go through the process of just learning how to become Bitcoin holders. So like, how did you get enticed over to Meanwhile?
So after that business that I built during COVID, which was a high net worth white glove concierge that helped mostly high net worth individuals and family offices who knew they wanted crypto in their portfolio, but had no idea how to get it, where to buy, how to buy, what coins to buy, in what weights and ratios, how to custody, how to make sure that if they pass away, that their crypto can go to their heirs, in their estate, to their loved ones safely, how to protect their passwords and private keys, all these things. They're, generally baby boomers, high net worth, not tech savvy, smart, successful, but they needed help. So I started this business, realizing that there was that opportunity, grew it during COVID. Obviously, the markets were very bullish and everything was up and to the right during COVID with the pandemic response and MMT just creating a bull market for all risk assets. And ultimately, I joined a crypto hedge fund called Hashnote, which was basically a spin-out of DRW and Cumberland Labs. Hashnote was an on-chain asset manager. They were trying to build out a private wealth fund. I met the CEO in 2023 here in Miami, and we got to talking. He was telling me exactly what he was trying to build, which was private wealth on chain. I told him what I built, which was private wealth off chain. He said, "Why don't you do that on chain with me?" And one thing led to another. I joined Hashnote in 23, brought a lot of clients over, helped them expand their offering. We had pretty interesting solutions to get yield on your Bitcoin, options vaults, covered call spreads, wrapped Bitcoin, staked Bitcoin, risk mitigated ways to not risk your principal. And, these are generally conservative, high net worth individuals who just wanted some yield on their long hodl Bitcoin that they were just sitting on for many years. And it was a great experience with Hashnote. While I was at Hashnote in 2024, I discovered Meanwhile. And Meanwhile is a Bitcoin denominated whole life insurance company. They are extremely interesting because essentially you pay your premiums in Bitcoin, your death benefits paid in Bitcoin, and like all whole life insurance, not term, but whole life insurance, they are investment vehicles.
Hmm.
And as such, you can take a policy loan out from your policy. Traditionally, it's fiat, so you get cash, but in this case, you're getting Bitcoin. And when you get that loan, it's at a new stepped up cost basis. So for Bitcoin terms, while you might have low cost basis Bitcoin, when you get a policy loan, suddenly the cost basis of the Bitcoin that you're going to be getting, that you're borrowing out of your loan, and I'm going to explain this in a little more detail, but I'm just going high level right now. It's at the cost basis established on the day you originate that loan.
Mm.
Bitcoin's trading at $1 million, and you take a policy loan. Well, then the cost basis of that Bitcoin is $1 million, and you get Bitcoin in a KYC'd wallet. You could do as policyholder whatever you want with that Bitcoin. Meanwhile, it's done after they transfer you the Bitcoin. You then go quickly and sell it at the same price that you borrowed it at, and you get all that cash into your bank account. The exchange asks you where the Bitcoin come from, what's the cost basis. You have a document that supports that comes from a life insurance policy by this regulated licensed company. Meanwhile, and your cost basis is not $100 or $1,000 or $10,000. It's $1 million. And so you pocket all the cash, you pay zero in capital gains. That's how life insurance works. But now I'm explaining it
Right.
in terms, and that's what Meanwhile did. They built a Bitcoin denominated life insurance company from the ground up. The reason that they had to do it from the ground up and that existing huge life insurance carriers can't do this is because those existing life insurance carriers are dollar denominated. There's a dollarization component at all points in the life cycle of insurance. But if you start a new company from the ground up, and Meanwhile domiciled in Bermuda, one of the biggest insurance regulators in the world, most reputable, credible insurance regulators in the world, and they decided to denominate the entire carrier, the entire operating company, the OpCo, in Bitcoin, meaning their audited financials are a bunch of numbers on a table with B's in front of them, not dollar signs.
Oh, wow. So let me just go back a bit to the beginning and your transition. You said you're doing this like white glove consulting before you joined Hashnote, and it sounds like many of the services that you're providing were really the same services that you're doing now. And meanwhile, it's just that you've taken a product and you've added like a product element on top to provide a wrapper for those services, so you can have an easier to acquire like entity or like legal setup, so you don't have to go through all the rigmarole that you were going before, and it has some extra like tax benefits at the end of the day.
Yeah. Before I was helping people acquire and custody crypto. Then at
Which
Hashnote, I
which
was
is like I just want to pause on that point because like I'm sure many people at home have like helped their family, like sign up to Coinbase, buy some Bitcoin, do that. It's a process. Like
oh yeah,
you're on the phone for like
you're
hours.
screen sharing. Should I
Yeah.
click this? Do I not click this? No, don't click that.
Yeah.
Don't put that in your email. Don't
Exactly.
email yourself your password. Yeah, all
Yeah.
that. It's a
It,
lot
it,
of hand holding.
it's a lot of hand holding, and it's hours and hours and hours and hours. But like now with this Meanwhile product, you've taken all of it. I know that you've kind of like you're giving up self custody, to get a lot more benefits and have a much easier product that people can that really anybody can acquire to set up this whole life insurance product.
That's right. Um, it to go from helping people acquire crypto and mostly self custody to then go on chain and get some yield, and now to be able to have this seamless inheritance wealth transfer upon passing, because that's another aspect of the whole business of helping people buy and custody Bitcoin is what happens if you die. Do you
Yeah.
want to create a treasure map of go to this safety deposit box, get that ledger, go to that safety deposit box, get these private keys, then go online, use a secure, encrypted network, log in, do this, do that. What a process when it comes to self-custodying and then transferring your crypto to someone else who's not as familiar as you are, if God forbid you pass away.
Yeah.
To then go into a life insurance product where your Bitcoin will seamlessly transfer from you to your beneficiaries, to your loved ones, to the heirs, makes it so much easier. So Meanwhile uses Anchorage as a custodian. The reason we chose Anchorage is because they're a trust company, and as such, they're bankruptcy remote. So if anything happens to Anchorage, your Bitcoin, Meanwhile's Bitcoin, is protected from bankruptcy proceedings, hence bankruptcy remote. That's an important point. And so really, for those who are just too scared of self custody, or they quote unquote want to take out insurance against themselves, against their, uh, ability to make a mistake with self custody and lose their crypto assets forever. Um, Anchorage and using Meanwhile to have a free Anchorage custody account, it's really an upgrade in custody and in the ability to sleep well at night. If you can get behind and trust that we use a qualified bankruptcy remote custodian that probably the US government is going to use as well. I think the SBR is going to start using Anchorage for custody, and they're huge and reputable and licensed and regulated and transparent. Then I think that you can realize that it's an upgrade in custody, that you can sleep better at night, that you, with a life insurance wrapper, know that your crypto will always be there, that it will go to your heirs one day upon your passing in a very easy, seamless way. I mean, dealing with grieving families after someone dies is not easy. And then to say, hey, you need to get your crypto. I
Yeah.
mean, we make it with this. I'm taking that white glove, part of my past, and applying it to Meanwhile to make it
Yeah.
as easy and seamless as possible.
So, like, one of my biggest regrets back from 2018, 19, 20 period was not setting up a self-directed IRA at the time and just funding it with like Bitcoin and some stake teeth. I really regret not doing that because, uh, it was just one of those things that it was kind of like the hot product that came out back then. Like the companies had just set up that ability to do those self-directed crypto IRAs, and if it's the same, it's a similar type of product that it's a legal wrapper that allows you to put assets into it. Those assets can grow tax free, and then once you hit a certain age, you can pull them out. I believe it's like 65 or something like this.
59
So
and a half
50. Oh, it's 59. Oh wow.
and
So
a
like,
half.
how does a whole life insurance policy differ from, say, like a self-directed IRA? It
Yeah, good question. So, life insurance, whole life insurance is an investment vehicle, and um, there's no waiting period for you to be able to access it. The way we have it structured is we modeled exactly after traditional whole life. And in fact, Northwestern Mutual is one of our seed investors, in addition to Sam Altman from OpenAI, and Google's Gradient Ventures, and others. Um, Northwestern Mutual is a very important investor and partner of ours. And we modeled our product, our insurance product, after a traditional, what's called a 10 pay or limited pay whole life insurance vehicle. What that means is you pay your premiums 10 times annually in equal installments. So let's say, as an example, you do a 10 Bitcoin premium policy. You would pay annually 1 Bitcoin in premium for 10 years to equate to 10 total Bitcoin in premium. Now, let's say, um, to get a sense of the death benefit of what that would mean, what 10 Bitcoin would equate to, it really depends on your age, your health, your sex, whether you're a smoker or not. All these things go into the underwriting of an insured. And we then use, as all life insurance companies use, actuarial and morbidity tables to determine the likelihood of when you will die and how much growth you can get in your policy to determine how much death benefit. But to use an easy example, a 35-year-old healthy non-smoking male who has a 10 Bitcoin premium policy, so they pay once a year for 10 years, probably has a death benefit, and I'm just ballparking here, of about 16, 17 Bitcoin.
Mm.
So you put in 10 Bitcoin, and if you die, 17 Bitcoin are paid out to your loved ones. Where does that extra 7 Bitcoin come from? Well, like all life insurance products, your policy grows every year. Meanwhile, has a 2% annual growth rate compounded that every policyholder gets, meaning we are going to grow your Bitcoin in Bitcoin denominated terms by 2% annually. And the way we do that is we work with different companies in the space that have Bitcoin denominated yield. Coinbase is a good example, Coinbase Agency Lending. One of the cornerstone, most reputable firms in all of crypto, at least in America, to get Bitcoin denominated, not dollar denominated yield. We're not borrowing against Bitcoin. We are using our Bitcoin to generate Bitcoin yield because, again, Meanwhile operates in Bitcoin terms only. We're a think in Bitcoin company, no dollars.
Mm-hmm.
We have a holding company with dollars to pay salaries and expenses, but the operating company that you pay your premiums into is Bitcoin denominated. Financial tables have numbers with B's in front of them, not dollar signs. So everything has to be Bitcoin denominated yield. And so the 35-year-old is now going to pay their premiums once a year for 10 years in Bitcoin, regardless of the price of Bitcoin. Again, we don't care about the dollar value. You are paying Bitcoin in, you're getting 17 Bitcoin out. And after 2 years, which is a AML requirement by our regulator, the Bermuda Monetary Authority, you can then start borrowing against your policy. You don't have to wait till you're 59 or 60 to start accessing the cash value of your life insurance vehicle, such as with an IRA. So after 2 years, you can borrow up to 90% of what's called the surrender value, or traditionally the cash value of your policy. It's based on the amount of premiums you paid in, and based on the amount of growth that your premiums have experienced to date. And so at that point, if you actually think about it, you've paid 3 premiums after 2 years: day 0, year 1, year 2. So 1 Bitcoin, 2 Bitcoin, 3 Bitcoin. You can borrow 90% of the surrender value on the 3 Bitcoins, call it conservatively 2.5 Bitcoin. You can borrow it. It's a 90% surrender value, so it's like a 90% LTV loan. You're paying a 3% carry interest charge on that loan, which gets paid, it all gets netted out of the death benefit. So you're not getting an invoice for 3%. It just all gets netted over time. Importantly to note, you never have to repay that loan because you're borrowing from yourself or your loved ones. You're not borrowing from Meanwhile. You're not borrowing from a lender. You're not borrowing from a trading desk. You're borrowing from your own policy. And so if you have a 2 Bitcoin loan out and your death benefit's 17 and you pass away, then it nets out to a 15 death benefit, 17 less 2. So 90% LTV, 3% interest rate that you're paying for that loan. And importantly to note, you're never at risk of a margin call. Bitcoin has historically corrected 80% during bear markets, 70, 80%. And if you are borrowing dollars against your Bitcoin and the market crashes, then you get hit with a margin call. But not in this case, because again, you're borrowing from yourself, not a lending desk, not a trading company. You're borrowing in Bitcoin terms, 2 Bitcoin out of a 17 Bitcoin death benefit. So it doesn't matter what the dollar value of Bitcoin does, we think in Bitcoin. So there's never a margin call.
Okay, the thing that would worry me a little bit is that I have to pay 0.1 BTC a year to get this 10 BTC. There could be some really high
one Bitcoin a year.
1 Bitcoin a year, right? And you could probably break it up into can you break it up into payments, or like you just pay 1 Bitcoin?
You pay 1 Bitcoin a year for 10 years, and it's that simple. We have a prepayment rider that you can also take out, which allows you to just send all 10 Bitcoin on day 0. We escrow it at Anchorage. We pay for you, so you don't have to worry about Bitcoin's at $1 million. I have to go scoop up a Bitcoin where it used to be $84,000.
Yeah.
That's not a good way. That's not a good way to approach this, because you got to have you really should have all the Bitcoin you want to devote to this policy on day zero.
Yeah.
Not expecting to go buy it each year to fund your policy.
Right.
Because
Yeah.
we all expect Bitcoin to go up and to the right.
Yeah. That's kind of what I wanted to know, is like, if you're funding it like yearly and the price of Bitcoin goes from 100,000 to a million, and now you're having to pay $1 million a year, your premiums have just shot up 10x.
You're still paying one Bitcoin though.
Right.
Think in Bitcoin.
Right. In Bitcoin. Right. Yes. But the cash that you have to convert like comes from there, right? So, yeah, well, that's good that you can actually, so you can pre-fund it on day zero with everything that you could need,
and never have to worry about reminding yourself to send in the Bitcoin again, and your policy is active forever, and it's pretty simple from there on out. So really, we would guide anyone who wants to take out a policy to look at how much spot Bitcoin you have in your wallet or in your portfolio, and determine how much of that right now you'd want to devote into total premiums, which would get paid over 10 years. Don't expect to have to buy some in the future, because we're all bullish. If you have Bitcoin and you are considering this product, you are clearly bullish and you expect Bitcoin to go up a lot over time, over 5 years, 10 years, 50 years. So figure out how much of your Bitcoin stash that you want to devote to this policy right now before you decide. And now, also importantly, I guess the last piece, by the way, that I meant to describe is you get the policy loan. The policy loan, after 2 years, you can borrow up to 90% of the surrender value. You get that Bitcoin at a new cost basis. So if you had bought Bitcoin at $1,000 a coin back in the day, good on you. You've sold it over time. 2017, maybe it went to 20,000. You were like, oh, this is amazing. I'm going to sell some, pay your capital gains tax, big appreciation. Now we're at 84, 85,000. You sell some, huge capital gains tax. Uncle Sam yesterday came and swept everyone's checking accounts, and that's just how it works. But if you have a policy with Meanwhile and you take a policy loan and sell that Bitcoin, well, there's no capital gains tax there, because you are getting a new cost basis, new Bitcoin out of a policy. It's no longer your old Bitcoin with the old cost basis.
So just to be clear, let's say in this previous cycle, I bought some Bitcoin when it was at 20,000. If I was going to transfer it into Meanwhile's product, the life insurance product, would I receive a new cost basis, or could I keep my old $20,000 cost basis?
So different CPAs have different opinions. Meanwhile, me and Meanwhile do not give out tax advice, but I'll tell you what anecdotally we've gotten from some others. Some CPAs say that yes, that is a purchase of a life insurance policy, and therefore that's a taxable event that you have to pay taxes on. And if it's at 84,000 when you take out the policy, then you have a gain. Other CPAs, however, will say that's not a taxable event, because you're just transferring Bitcoin from wallet one to wallet two. When you send it to Meanwhile, you're actually sending it to a segregated account in your own name at Anchorage for your policy. Nobody's selling that Bitcoin. You're not selling it. Meanwhile is not selling it, and therefore nothing is being realized. So it depends who you talk to. The truth is that it's a gray area and there's nothing clear defined. And so it's up to you whether you want to, preemptively pay taxes that you might never actually have needed to pay, and you might never get back in the future if it's determined that that's not a taxable event. Or you can not pay the taxes with a very good argument with CPAs supporting it, saying that it's not a taxable event. Again, I don't give tax advice. Meanwhile does not give tax advice. It's up to you. Talk to your, tax advisors and determine what's best for you.
My CPA doesn't give tax advice.
Well, I don't know what type of CPA you have then.
Well, I mean, like, there's a lot of like yes, most crypto stuff is clear at this point. I think there's some gray areas still in like this. Like, if I ask my CPA, I'd probably get two different questions from two different ones.
Well, why don't you explain to him the product and be like, hey, I'm taking this out.
Yeah.
And then ask him, be like, do I have to pay taxes on this? And we'll see what he says.
Yeah. Last question before we wrap up is, like, who is this for? Like, how much Bitcoin do I actually need to come and open a a whole life insurance policy with Meanwhile. Do I need 10 BTC? Can I do it with one? Do I need
You
five?
could
Like,
do it. You could do it with one and pay 0.1 in premiums for 10 years. So 0.1 times 10 is 1 Bitcoin. That's the minimum size. The maximum size is a 50 Bitcoin face value amount. So, for that 35-year-old male, it'd be like 37 Bitcoin in premium, or 3.7 a year. It
so
depends on your age and health for
so
that, but it's
Michael Saylor's not going to be a client with his his
he
Bitcoin
has
stash. He's taking his to his grave anyways. So
yeah, he's a little rich, and has so much Bitcoin. But it's really for high net worth individuals, or retail individuals, for trusts, irrevocable trusts, irrevocable life insurance trusts, ILITs. If you're, we only insure people ages 18 to 65 right now. If you're over 65, you can actually, through an irrevocable trust, insure your children through the trust, and you would control the trust. And so therefore you can access the cash value through policy loans yourself and monetize your Bitcoin and have it net out of the death benefit should you pass, and your children get what's left over. So it's a really good way. It's just an amazing way for anyone who wants to not pay capital gains on their Bitcoin through the policy loan, selling it, new cost basis, zero capital gains. You get all the cash, buy a house, buy a car, whatever you're going to use the cash for, whatever you want to monetize your Bitcoin for in the future. This is an amazing product. And then if you pass, it's a very seamless transfer of tax-free estate, tax-free estate transfer to your heirs, to your loved ones. You don't have to worry about the treasure map of passcodes and private keys and ledgers.
yeah, which is a mess as well too. I think about this sometimes. Um, well, that's pretty cool. I think this is a really nice product actually, and that's probably indicative of why Meanwhile just did a Series A for 40 million.
Yeah.
Um, like what are those funds going to go for operations? Is it like hiring more
We
salespeople, hiring
no,
more?
we're trying to be as lean as possible. Our CTO is unbelievable and believes in using AI as much as possible to automate as much as we can to keep the team as lean as possible. So basically, grow the biggest insurance carrier in the world with the fewest amount of people. That's our goal. We have plans for global expansion with this capital. We have our eyes on some other insurance carriers and other jurisdictions that can help us grow our global footprint as well. We need to buy some Bitcoin because, we are a Bitcoin denominated company. We have a lot of plans, and who knows when our Series B might be. It might actually be soon.
Oh, wow.
Yeah.
I mean, that it's a really cool product actually, because this is the first product that has really kind of tingled my spidey senses since the Bitcoin IRAs came along. And
Yeah, I think
those,
we solve problems. I think we solve the problem of not wanting to pay fucking tax. Sorry for the
yeah,
language, but not wanting to pay your taxes
yeah,
when you sell Bitcoin. Obviously, you have to pay your taxes unless it's in a life insurance wrapper. Then you don't through
hmm,
policy loans.
right.
And for anyone who has Bitcoin that wants to sell and doesn't want to pay taxes, get a life insurance policy and let's talk.
Yeah, it's actually really like because the IRAs are not really accessible to high net worth individuals. I think there's a cap after what is like 150 or 200,000. Like you can't deposit into an IRA anymore. So this makes much more sense for people who do have access to capital. And even somebody like that's kind of in the middle as well too. And maybe only has like a couple of like one BTC
Yeah.
or two BTC.
And
Like,
and the last thing that we didn't focus on yet is the fact that I told you in this example, 10 Bitcoin premium pays out 17 Bitcoin in death benefit. That extra 7 Bitcoin, I mean, you only bought 10 Bitcoin in your life, let's say in this example. Where's that 7 come from? We're growing it.
yeah,
What other product gives you in perpetuity a 170% increase in the amount of BTC of sats that you're sitting on? It's a pretty powerful concept if you think about it from that
yeah.
perspective. So, tax-free growth, tax-free loans. It's that's why I joined this company. They're just, and it's an incredible company.
It makes sense. It's a product that makes sense.
Yeah.
Yeah. So like how can people listening to this, if they want to use your product, like how should they get in touch with you?
Reach out to me. I'm at LeboBTC on Twitter. Go to our website. Um, meanwhile.bm, meanwhile.bm, because we're in Bermuda. You can see everything there. You could start an application there. Everything is done online, by the way. If you want to get a policy for yourself, you don't have to pee in a cup or get a blood test or visit a doctor. It's all done online through HIPAA and form attestations, by sharing your health records with our insurance team, and we underwrite you individually. Once you start an application, you can have a policy in 2 days.
Oh, wow.
So it's very quick. This isn't a lengthy process.
That's actually really quick, because the last time I was looking at life insurance, they wanted to like send somebody out to come and come to my house.
Yeah.
That's pretty cool though. That's that's a quick turnaround time, 2 days to pump out life insurance like that. That's awesome.
Yeah, I mean, we're a lean team. As policy applications come in, our team just quickly reviews them. We have multiple layers of review, but we're working 24/7. So, if we have any questions, we get back in touch with you for clarification. But you submit all your documents, submit your application. Either me or my colleague Daniel reach out to you individually, with greetings, and answer any personal questions you might have before you ultimately transfer in your Bitcoin. The way we do transfers of Bitcoin, because this is an in-kind contribution or subscription, is, as anyone with Bitcoin knows, you send in a test transaction first, we confirm receipt, and then you send in the remainder for your first year's premium. As soon as we receive your premium, then your policy is bound and active, meaning, God forbid you pass away the next day, you have this active policy, your loved ones are taken care of. And yeah, that's how life insurance works.
Oh, that's awesome. Since you're in Bermuda, this is more than just this is a product that's more than just for Americans, right? Like anyone can come and access this.
We have plans for a global footprint, but get in touch with us. Even if you're anywhere in the world, get in touch with us, and we'll see what we can do. And if we can't now, I know we have plans too soon, but there's certain countries we can, certain countries we can't. But hopefully we'll be global very, very soon. That's part of why we raised this money in our Series A, is to get global expansion.
Amazing. Well, everybody listening at home, I hope you enjoyed learning about this new Bitcoin life insurance product. It's definitely novel, and there's nothing else like it on the market right now. And like Jason said, it has a lot of value-added benefits, like those Bitcoin-denominated loans and the yield that's generated for it, which make it seem a really cool product. I'm going to have to do a lot more research on this, and might have to take one out in the future. So, Jason, thank you so much for coming on today.
Thanks for having me.
Yeah. And thanks everybody at home for tuning in. We'll be back tomorrow. We've got a bunch of guests lined up. So thank you everybody for tuning in, and we will see you on the next tide.